Hey everyone, Bill Sheridan here with the Maryland Association of CPAs and the Business Learning Institute. Time for the news. Let's take a quick look at what's happening around the profession today. That's Thursday, March 24th, 2016. First up, a heads up for all of you AICPA members out there. The AICPA's Governing Council has authorized a member ballot on a proposal by the AICPA and the Chartered Institute of Management Accountants to create a new association representing the entire accounting profession while also preserving the AICPA and CIMA membership bodies. A third party will distribute the ballot under the name AICPA Independent Tabulator. That'll be distributed during the week of April 18th. The ballot will remain open through June 16th, so keep your eyes out for that. More details about this AICPA-CIMA joint venture can be found on our blog, cpasuccess.com. Elsewhere, a revised Form 3115 titled Application for Change in Accounting Method has been issued by the IRS. This new version of the form is the first revision since 2009. The instructions to the form have also been revised. As a transition rule, the IRS announced it will accept the 2009 version of the form until April 19th of this year, unless the use of the new form is specifically required in IRS guidance. After April 19th, all taxpayers must use the new form, and the IRS is encouraging taxpayers to use it before then. You can get details about that new form on the Journal of Accountancy's website. Citing congressional budget cuts, the nonprofit, nonpartisan Transactional Records Access Clearinghouse at Syracuse University reports IRS audits of very large and giant corporations are plummeting. The likely result, even steeper reductions in government revenues. Crunching data from fiscal 2010 through 2016, the clearinghouse finds 5 key takeaways. 1, revenue agent hours aimed at corporations with $250 million or more in assets has declined by 34%. Secondly, unreported taxes uncovered by IRS would otherwise have been lost to the government. They dropped by 64%. Thirdly, declines were even sharper for the giants of the business world, those with $20 billion or more in assets. Fourth, even more recent data through February of 2016 indicates that business audits of large companies are running 22% lower this year than for the same period last year. And 5, as a result, the potential loss to the government now amounts to about $15 billion or more per year. You can read more about that at CPAtrendlines.com. And more from CPA Trendlines. Over a fifth of all respondents to a CPA Trendlines survey are having a bad start to the year. Granted, 19.3% say it's only somewhat worse, and a small minority, only 3%, say it's much worse. We're talking about tax season here among tax preparers. Still, worse is worse, especially when it's worse if it's worse than bad, rather. So what's happening at these less fortunate firms? That's the question. Well, the answer seems to be a more common gripe is that about their clients. Though many firms say that clients are bringing in their stuff for tax season, a good third of the worst year firms are seeing delays and fearing the tsunami to come. So you can read more about that at CPAtrendlines.com. Kind of a rough start to tax season for a lot of tax preparers. Among the world's 63 major stock indexes, 28 with a combined value of $28.5 trillion are in bull markets. Another 10 with $4.3 trillion are poised to join them in those bull markets. Global shares are rebounding, it seems like, from the worst January plunge in 7 years as oil prices recovered and the Federal Reserve slowed the path of interest rate increases. That has helped ease investor concern over the drag on the world economy from China's weakest growth in a quarter century. Still, some money managers are questioning the strength of the rally. They're citing lower expectations for corporate earnings. You can read more about that at Bloomberg.com. On the other side of the economic coin, the average rating on U.S. corporate debt has hit nearly a 15-year low. That's according to a new report by Standards & Poor's. The average rating on companies that issue debt has fallen to BB or junk status. That's even lower than the average S&P rating for U.S. corporate debt during and in the aftermath of the financial crisis of 2008 and 2009. You can read more about that at cnnmoney.com. Maryland's House of Delegates has passed its version of the state budget amid praise from many Republicans. who in past years had opposed the state's annual spending plan. The House voted 133 to 5 in favor of the $42 billion budget, which was submitted by Governor Larry Hogan and revised by a House committee. The budget next goes to a House-Senate Conference Committee where the two chambers will work out the relatively minor differences between the two versions. Read more about that at the Baltimore Sun's website. And while the presidential election is still many months away, it's already shaping CPA executives' view of the future. That's according to survey data released by the AICPA. About 64% of CPA executives say the election will factor into business planning for the next fiscal year to some extent. 26% say the election is a slight factor. 23% say it will be a moderate factor. About 15% say it will significantly factor into business planning, budgeting, and forecasting. 36% say the election is not a factor at all in their business plans for the next fiscal year. The Journal of Accountancy has all the details on that. Finally, if you're wondering what the future of finance looks like, you might want to consider joining me and Tom Hood at Oracle's Modern Finance Experience. We'll be there. It's being held April 6th and 7th in Chicago. It'll examine the key changing role of finance and what role technology plays in that evolution. It'll also feature keynotes from Oracle CEOs Safra Catz and Mark Hurd, as well as City of Detroit CFO John Hill, and The Big Short author Michael Lewis will also be there. Sounds like it'll be a great show. You can get details and register at modernfinanceexperiencechicago.oracle.com. That's it for today. Have a great night, everyone, and I will talk to you tomorrow. Take care.